Welcome to your Average Traders, episode 5. It's been a real busy week this in terms of corporate earnings and news events around the world, and we're going to just discuss them with you today. We had 5 of the top 6 market cap companies in the US report this week. So it's been one hell of a heavy one in terms of earnings, and it's with mixed earnings. We've seen, positive to negative, and we're going to go through all of those today. So without further ado, let's just jump straight into our first one, which was Facebook. They did report after the close on Monday. And again, just like Snapchat last week, they were impacted by the iOS privacy changes. They did report a slight beat on their EPS, which was $3.22, but revenue did come in slightly short, but they did announce a big repurchase program of about $50 billion. And just like with Snap, they did note significant uncertainty ahead for Q4 and continued headwinds from their iOS 14 changes. Their fourth quarter guidance is below consensus, but the big news that also got put into the background with the news on Thursday after the close that they're changing their name to Meta, with emphasis on the metaverse. So, what do you think of that?
Well, so it's like done in a similar vein to how Google changed their name to Alphabet back in the day. It seems, they're saying Meta, they're really focusing on the metaverse, right? But I think that's still a long way away, right? Especially with updates there need to be for their Oculus products to actually get to their vision. I mean, obviously they're trying to, focus on that, but it's like a departure from, Facebook's other products, Instagram and WhatsApp, as well as Facebook, are all platforms, and they work on all screens and pretty much all internet connected devices. So this is trying to switch that over to something, even though there's going to be a large software element to it, it's really relying on that hardware piece. So it's kind of a real shift. And I think when we were talking earlier, you were saying how it's, maybe a smokescreen.
Yeah, like Edward Snowden said it in a tweet, don't let the name change detract from what is really going on in Facebook. There's been a lot of scrutiny. There's a lot of research that, that they've had and conducted that show the harmful effects on teens and their lack of wanting to do or doing anything about it. And the thing is that they are still a social media company. Nothing's really changed apart from the name. I think Facebook is now getting a bit of bad play among many people. And so what do you do when you get a bit of bad play? Change name, So the thing is that with Facebook, Meta is just trying to change the whole angle, going towards this new universe. But I don't know. I mean,
in the last 2 years, you've really seen that virtual goods are increasingly seen as really valuable assets, and they're seemingly more coveted than their real life counterparts. Like with their NFTs. And
we had just this week that Chipotle is now on Roblox, and you can get virtual burritos. There we go.
Exactly. My kids love Roblox, and they're really immersed in these virtual worlds, right? And maybe they'll be the first kind of generation to really embrace the kind of Ready Player One style life. But like Zuckerberg admits, there's a big gap in technology, and that means it's going to hold back from mass adoption, anytime soon. But they unveiled that new device, their Cambria, and even though it's going to be the gateway to their metaverse, but it's really expensive. So you're not going to see the type of monthly active users and the growth that Facebook, Instagram, WhatsApp has had, anytime soon. Especially when you're relying on this type of hardware product, which is not really a must-have at the moment, And we've got the batteries being like one of the significant bottlenecks to, decent performance on a GPU and a CPU on a headset, right? And you don't want, when you think about these devices, you don't, in the future, you don't really think about, we're going to have this kind of headset on, but it's going to be tethered to some kind of PC or some other kind of device. So, they've got a long way to go.
But what they did do was shift the narrative. I mean, the one thing is Snap took it a bit on the chin for Facebook because most of the reaction was on last week in Facebook. So, a lot of this earnings was sort of baked in. But if we look at how it performed during the week, this is when they reported. You had initial spike up, and then it sort of went down, and then it's a bit of volatile trade. And during that, the following day on the Tuesday, I believe, it was going up, and then we sort of pushed all the way down to 310, and then we've just been chopping and changing in about a $15 range. And this was the Thursday night, and today we've seen a bit of strength in Facebook as they did announce that meta change name yesterday. So, you know, it's pretty much as you were for Facebook. Most of the move actually was made last week on the back of Snap. So this is where we are with Facebook. But one of the strongest earnings we had this week was Microsoft. They reported really strong top and bottom line beat, really strong growth in their Azure revenue, their cloud, their server products also showed strong growth. Pretty much all of their lines have shown really strong growth. They're really starting to monetize on LinkedIn as well, with LinkedIn revenue up 42%, and their profits from LinkedIn also up huge. And they did guide their second quarter revenue on an implied basis well above consensus too. So with Microsoft, bear in mind, it's a $2.3 trillion company, had a 5% move after that earnings. And this is when I believe it was, and we had a spike up and we just went up that whole day. We pretty much moved up $15 on a $310 stock. So it was a gigantic move for Microsoft.
Yeah, I have to say that LinkedIn was just a brilliant purchase from Microsoft. You know, like it's them getting into the really profitable business social media product. You know, so it's just genius.
Yeah, talking about LinkedIn, I mean, you see, LinkedIn is very easy to monetize. You've got what it's effectively like a job search website, and but there's so much through job advertising in that. You can see how they can monetize it. Facebook as well has so many things, but just a mention on Twitter. Twitter this week also reported results, and they were down 10%, similar sort of, fate to Snapchat in a way. And again, Twitter has not managed to monetize the user in the same effect as Facebook and like LinkedIn quite clearly.
Yeah, it seems, I think with LinkedIn, it's just so much more natural to want to pay for something like that, especially as you see, direct business relationships on that type of platform. Twitter, I think maybe, I don't know if it's Jack Dorsey's style, to try to keep advertising to a minimum. I'm sure they could advertise a lot more. I should just see the native ads show up, every so often. But, they could really try to monetize it a lot more, maybe with, more video ads.
That's what's keeping me on Twitter more than any other social platform.
Yeah, that's true.
I can't stand these advertising billboards on social media, like just ads galore, and I feel like Twitter is probably the most purest experience of how things should be, but again at the detriment a little bit to their earnings, but it keeps me on the platform.
You see, I mean, no matter what Facebook or Meta as they call it, like that's just a cash cow, and it's still the cheapest way to get leads for many businesses. I don't think that's going to be changing, no matter what. They might not have the best reputation at the moment. They're not universally loved, but I think that's been Facebook's thing from pretty much the beginning. They're taking away advertising spend from traditional media.
So they're doing $29 billion in revenue. That is incredible. I mean, $29 billion of just selling stuff on ads. I mean, it's a very profitable business, so I think it'll be fine. No,
it's going to be completely fine. I don't see them having any real big issues. I mean, there are a few things coming up with Congress and all of that, trying to question them and all of that. But again, talking about other genius acquisitions, is WhatsApp and Instagram for
Facebook.
Facebook,
like
Instagram, absolutely phenomenal.
$1 billion. Instagram's probably worth about $300 billion now. Like that is.
Oh yeah, definitely.
It's one of the best purchases. It's insane. But talking about ad revenue and that, let's talk about Alphabet, Google. Just quarter after quarter, they're just pumping in the numbers, and $28 pretty much EPS, which was an almost $5 beat, and 53.6 billion ex-TAC, which was also a strong beat. And again, just mad growth in all their segments. And we've got ad revenue, YouTube ad revenue, and segment revenue all up. And they did note that they did have the iOS changes did have a modest impact on YouTube sales, but the thing is, it still wasn't enough to really stop the juggernaut, which is Google. And on that, they did have another similar move to Microsoft, where it moved up over 6% on the back of that. It was on that day, You had Microsoft up 5% and Google up 6.5%. It was incredible moves with two massive companies. And, you don't normally see 5-6% moves on $2 trillion companies. But there you go. We almost pushed towards that 3,000 mark, and we settled at around just above 2,900. And today we're having another move in Google as well, is pushing it back up towards that 3,000. So there was another strong one for Google. So what can you say?
When you just look at any of these charts, 5-year chart of any of these tech Goliaths, right? It's just
it's incredible. Like this pandemic
top right
has added 100% market cap to virtually the whole tech space. Like you look at it, I mean, bear in mind 2019 was a record year as well, and then you see the moves since then, and this pandemic has created more wealth than anything else. It's much more localized wealth. Like, for example, Elon Musk went from 40 billion to 350 billion. But I mean, pretty much all these tech CEOs and tech employees, they've absolutely just cleaned up with the growth in their stock.
Shareholders loving it, but this is what happens when you print, trillions. I mean, like, literally, only a portion of those trillions need to go into these, into the limited share, floats for all of these big mega tech companies to kind of cause these, huge moves.
There has been individualized pain, like in terms of individual stocks and some of the small caps, but I don't think there's been no more than 3 to 4 days worth of down moves this whole year. Like it literally, like the market has such a floor underneath it. It's just the immense amount of cash that's just pushing everything up. It's just incredible. I've just not seen a market that's just so resilient. Even with what we're going to go on to next with Google and Apple's earnings. I mean, two mega caps. They reported after the close yesterday. We had Apple number one reporting inline EPS, which for them is a miss basically, and revenue, which actually came 2 billion shy of estimates. And they did note that the supply constraints did hurt sales by around $6 billion in Q4, and they do expect continued supply constraints in the first quarter. But they do see Q1 to have very solid revenue growth and expect record revenue. Bear in mind, Samsung also had their earnings during the week too, which was another big name, and they had record earnings, noting that their chip sales were through the roof. So as you would expect, Samsung did really well. They sold 72 million phones. Apple don't really break out the amount of iPhones they sold, but their iPhone revenue did come in short of its consensus at 39 billion. The street had them at 41 billion, but it was strong growth from last year. The iPad was all right, but the services revenue continued to do well. Like it's almost coming up to 25% of their revenues. It's amazing how their services business has really become a big chunk of their overall revenue.
I've definitely seen a lot more people trying to get onto Apple TV. Maybe it's to do with Ted Lasso. I know a lot of people have been talking about that, but yeah, there's a lot more kind of traction going that way, as well as with Apple Fitness Plus.
I think it's all in the ecosystem with Apple. It's just the thing about with the streaming services, like I did sign up to Apple TV just to watch Ted Lasso. We just finished it. It's a great show. And so now I cancel my Apple TV. It's just as simple as that. I'll just wait. Because I mean, the thing is that, for me with the streaming services, unless it's a program that I really want to watch, I can find it on my regular Netflix, my Amazon Prime, and Peacock. Got just so many, and Disney Plus, and I don't need another one as well, even though it's only $5 a month. But still, it's just, I have it for that one show, and then I'll cancel it. But that's just how it is now, isn't it?
Yeah, but I mean, it's sticky with a lot of the audience. Just think, let's just keep it on. The thing is with Apple is it's all tied to the Apple ID, whilst with Netflix, you just have a username and password. So it's so much easier to share the Netflix IDs. And just imagine if they were able to somehow prevent that, or maybe that it's kind of built into their model already. But if everyone had to pay for their own accounts, they could easily double their revenue.
Clearly, the market don't care. Because Netflix is now pushing on towards 700. It's another one with a monster move. But what do you think about these supply constraints? So definitely seems that if you're in the hardware space, you're really getting hit. Like you're seeing these automakers, you're seeing Apple, and as we're going to see Amazon as well. Whereas, with Google, all software, Microsoft, predominant software, it's, their hardware business is pretty small relative to their overall business. So it definitely seems the hardware space is the one that is being affected the most. And as you see, $6 billion in supply chain constraints. It is an issue for pretty much everyone right now. Even these retailers, I think Dollar Tree, like all of them are talking about headwinds going into the fourth quarter due to the huge shipping costs, the freight costs that are happening right now to get goods from China. Like freight costs are like 10 times higher than what they were. It's bananas.
Mm-hmm.
But
yeah, definitely.
But if we just look at what Apple did, Apple, it was trading around 152, ran up on the back of the hype before that, before the results were, on the back of the strong results from Google and Microsoft, but then we had a drop and we dropped as low as 145, and now we're sort of settling around 147, 148 marks. So we saw about 3% decline in shares of Apple, which, I think, like I said, if someone's going to get an iPhone and they couldn't get it this quarter, I'm sure they're going to just get it the next quarter. So I think a lot of the market is sort of taking that in their stride.
Yeah, definitely. It's not like a must-have type purchase.
Since they're so similar to the last one anyway. So,
yeah, exactly. I guess with like autos, it's a lot more, like, oh, my lease is ending now, I need to get a new car. And, there's a lot more kind of time constraints based on that. And, you kind of sometimes, especially in the US, without a car, yeah, exactly. So, I mean, if we look at chip shortages, if people are acting like this is the first time it's happened, but like just in the last couple of years, Intel had a CPU chip shortage from 2018 to 2019, and there were GPU shortages in 2016 to 2018. And look, they still actually are continuing to this day. Before that, there were hard drive SSD shortages. It seems like a continuing theme. Making chips before COVID wasn't an easy process, and like few companies had the knowledge and specialist equipment to fabricate these chips, and lead times were usually like about 3 months. And now there's reports that like chip orders, taking a lot more time, and the demand for like tech products is going off the roof. So, with these automakers, they canceled their orders back when Corona hit, and that was really a bad move. And like, even an uncle of ours ordered a Volvo XC30, and he was told that his vehicle especially isn't going to have some of the safety features due to this chip shortage, and that's crazy. Like
that is insane.
Ford Focus apparently needs about 300 chips, and Ford Mustang Mach-E apparently needs around 3,000 chips. You can see with the huge amount of chips that EVs require from these legacy automakers. It's going to be really tough, even coming up in early 2022, for them to ramp up production. Luckily, Tesla didn't cancel their orders because I'm guessing Elon just thought, we need to carry on production, and no matter what, we're supply limited, not demand limited. So if we just carry on creating our vehicles, we're going to end up selling them anyway. So they just carried on with it. But that's not to say they weren't hit with chip shortages, right? Like Tesla don't make their own chips, but they're a lot more vertically integrated than most, or pretty much all automakers anyway. But they do design their chips in-house, but obviously they don't make them, because that's just another level of technology that you need. Some of the generic chips that Tesla did use, did suffer from the same supply chain issues, but they have really talented staff, working for them, and they were able to rewrite the code on their internal operating system and in the chips themselves sometimes to repurpose other microcontrollers, and they were able to swap them out, whilst legacy automakers have been caught out because they outsourced these parts from other manufacturers like Bosch, Continental, and the rest, and a complete system, not just the chip itself, like it'll be on a home main board. And because of this, they don't have access to the same engineering talent to just kind of swap out that internal operating system within the car. But I think, even Tesla, even though they've navigated it, the best out of all of the automakers, they have removed a few features from their cars. Like I think in the Model 3 and the Y, they removed lumbar support for the passengers. But this is nowhere as bad as, removing active safety features.
I was not aware. That is insane to take away the safety features. I feel like those should be large trips that you take away. Safety is number one thing. But let's just move on to Amazon now. Second quarter in a row, we've had a miss, but I mean, the numbers are still strong. I mean, the revenues are huge still, 111 billion. I remember when I used to say, oh, Walmart still makes the most amount of money. But I mean, next quarter, we're looking at 100. Well, let's start with Q3. They reported EPS, which missed, another miss, revenue, which came in shy. And their fourth quarter guidance on both counts are going to be a big miss. The thing is, the revenue still at the midpoint, 135 billion, which is huge. I'd say about 8% growth year on year. Bear in mind, last year was a COVID year, so still to get growth, I mean, that's still pretty impressive. But the stock didn't like it, went down about 3-4%. But funnily enough, I could take last quarter. I remember this. Like, Amazon is my biggest holding. Well, not my and so it sucks that this happened, but I was around 3,700 last quarter. Same type of earnings, went down to 3.2. And as this market does, it doesn't care about earnings. You will have the reaction initially, and then it will just do what it's going to do. And then it sort of trickled up, went back to around 3.5, and then here we are, back down to 3.2.5, 3.3. So we were right back where we were at the end of the after the reaction of the last quarter. And the main things, it slightly differs from Apple. Apple having 6 billion supply side constraints. With this one, with Amazon, they're seen to incur around several $1 billion of additional costs in consumer business. And it's mainly related to labor supply shortages and increased wage costs. So they're having inconsistent staff. It's hard to keep a lot of them in Italy. We all know that they're overworked really hard to get out these packages, try to get this next day. And it's crazy. Like, me personally, I try not to do next day because I know just like these guys have to go so much more just so I can get this one thing that I don't even need to use straight away the next day. So I try my best, not to. But the thing is, it's a tough one, and labor is the issue. We all know that a lot of these staff are all finding it, I know restaurants that can't stay open because they don't have enough staff. Staff is just a huge issue right now, and it's just like Amazon, it's a tough one. And they're offering so much now. They're offering to pay for your schooling and things like that. All of these employers are finding different ways to try to get staff on board because it's really hindering their business. So
even McDonald's is paying what, $22.50 an hour or something like that.
In Lidl, they opened up in America, but it's a prominent European brand of low cost supermarket. I mean, they're paying the guy that takes out the trolleys $20 an hour, which is unheard of. You'd be lucky if you used to get 8 or 9 before. And I mean, the guy was saying, I remember talking to him about working 60 to 70 hours a week. He's taking home $4 to $4.5 grand. I mean, doing gathering trolleys and stuff, and fair play to him. It's great for him, but I mean, how sustainable is this level of wage? I mean, and how much more is it going to advance the take-up of technology to sort of overcome these huge staff costs,
Yeah, exactly. I mean, the thing is it worth $20 an hour for trolleys for Lidl's business? And if not, then somehow it's going to be automated away in the future somehow.
I mean,
right?
it's nuts.
They're all waiting for the Tesla bot. That's their savior.
But let me just the reaction on Amazon, like I was mentioning, was trading at roughly 500, and it sort of dipped down to around 250, and I think even right now we're trading around there. So I mean, Wednesday we saw a huge move up in Amazon. I mean, Google and Microsoft, and today it was Apple and Amazon. But despite two of number one and I think number 3 or number 4 of the biggest market cap companies that make up about 15 to 20% of the Nasdaq. Yet the Nasdaq is still, the market still just went up, and Nasdaq's right now just unchanged. So I mean, despite even 2 of the big stalwarts having bad earnings, I mean, you can't keep this market down. It's a constant, I reckon most people are like, oh, thank God it went down, let's buy some, rather than, it's just a rampant market right now. There is just no let up at all. And with Tesla, let's not forget one of the biggest news catalysts this week, which was the Hertz deal. Huge catalyst for the stock. The stock trading above 1,100 now. It's been, aided by earnings, but Hertz has also been another huge catalyst, been a big driver.
Yeah, I mean, if you see Mark Fields taking Hertz, which, this time last year it was bankrupt, right? And now Hertz has been reinvented by this new interim CEO as the leader in progressive thinking in the rental car space. It's not just 100,000 cars. I mean, if you think about it, Hertz global fleet is 500,000 cars, and they're saying 100,000 cars, which they want delivered in the next, 1.5 years. And then also there was a deal done with Uber to take up to 50,000 of those cars. And obviously Uber don't want to buy them themselves from Tesla because obviously then they'll be treating their drivers as employees. So they're doing it through Hertz. But this means that I think $334 a week for Uber drivers who are 4.7 stars and above.
4.7 above,
will be able to lease these cars directly from Uber and not have the financial commitment to actually own them. So this has actually been a really positive catalyst for Tesla, and I think it's just mainly in terms of this shift, because Tesla isn't the only supplier of EVs, right? And they gave zero discount to Hertz, right? Which is unprecedented, because pretty much every other automaker will be absolutely going crazy to try to take this deal from for 100,000 cars from Hertz, right? And would have given any deal. But it just shows that Tesla are the only ones that can actually scale EVs. And with the business model that Hertz have, they buy cars below market value, by buying literally tens of thousands of them. Then they would use them for a year, right? And obviously make money from the rentals on these vehicles. And then after a year, they'll dispose of them. And usually the discount that they've actually got the cars at, they won't actually lose money on those cars when selling them. So they actually make money from the rental as well as from the car buying part of their business. But now with EVs, I think, especially with Teslas, they don't depreciate that much. Also, they don't require the maintenance that ICE cars need. So I think they'll be holding on to these fleets a lot longer. And obviously, in the future, they could use the autonomous capabilities for charging their customers, saying, okay, you've bought the rental, why not just, take a bit of self-driving for your trip, as long as you monitor the steering wheel. So it's really interesting. Like there's a lot implied in this deal. It's not just buying the EVs. It's not straight sale. It's all the implications that it has. And I can see that other rental companies are definitely going to follow suit. And then also the whole marketing aspect. What do you think of that?
I mean, it's clever. Like you're saying, I mean, you've got Tom Brady involved. Tesla's never been the advertiser of cars, and now you've got Hertz doing all their bidding for them.
Yeah,
so
exactly.
it's like
super clever.
Super clever, and they're in an enviable position of many of these automakers, and they definitely have a huge lead right now and leading the way forward. I mean, the share price is reflecting that.
Definitely.
Yeah.
Like Elon's always been the type of guy that he didn't believe in advertising, and obviously now he's getting his customers, Hertz, to advertise for them. And also, as I was saying to you, Rajan, I've noticed that the mainstream media is a lot more kinder to Tesla now. As you can see that, like my theory was always that because Tesla aren't spending any marketing dollars with them, and they would always have to protect their main revenue sources, in the automotive field, like GM, Ford, Toyota, all the rest of them. Now Hertz is advertising Tesla. So they're not a company that they are easily bad-mouthed now. They have to always think twice before that. So that's another genius move. You have to applaud both sides. I think that Mark Fields is definitely going to get promoted from interim CEO to CEO, because he deserves that position for turning the company around like this. Just imagine
it's
Hertz.
not shabby valuation now. It's 15 billion Hertz.
Yeah, definitely. Because it's so easily gone under, but they've done a great job in that recovery.
Yeah, I mean, clearly, if you look at the price action on Tesla over this past week, there is virtually no sellers. And I mean, the call activity, I mean, even today, last time I checked, 1,100 calls expiring today, there was over 200,000 that traded, and it's just this huge call, gamma squeeze that's going on, and just huge amount of call buying. And the thing is that right now there's funds that probably, I remember you were saying earlier, the funds that are underweight this, that are probably trying to balance their allocations and stuff like that. So you can clearly see that people are just pumping into Tesla to another level.
And the market makers, obviously, there are a lot of calls, at the 1,100 mark, they've had to hedge themselves by buying. And obviously, you've seen quite a few gap ups in the stock price over the last few weeks. So it'll be really interesting to see how it continues to progress as these calls expire.
Yeah, I mean, there's been, I remember the thousand calls. I mean, there's a lot of people that have absolutely cleaned up on the calls, or just anyone who's long has really just done very well. And the question is just like how much does it keep on ramping up? Like, at what point is, $1.1 trillion today on just look at the numbers. I mean, I know that, it's like they're pricing in. I don't know. The question is, what are they pricing in? It just seems pretty.
You see Morgan Stanley, they increased their price target to $1,600, and you see like Wall Street consensus actually creeping up way above the current stock price at the moment.
A lot of these guys, with these analysts, they it's just like a headline thing for them. Even when Cathie Wood said 3,000, the cynic in me says, oh, it's just that headline grabbing target to get everyone talking, start the conversation. But I've never seen a consensus right now where everyone just thinks 2,000 is a given. And, maybe it is. It just, the rate at which it's going might hit there, by end of the year, beginning next year. So,
it's absolutely crazy. Yeah. But the craziest thing is, looking at Cathie's split predictions, was it 2-3 years ago, where she was saying, Tesla's going to hit 3,000-4,000, and now it's 5,500 pre-split, which is just insane.
I think what people just didn't account for is just I think fundamentally, in my opinion, it's not worth this much, but there is this cult and fan, and it's a bit like Apple. There's this culture and sort of hodler mentality that is, there's just people that there's a massive part of the base that just don't want to sell. And the thing is that with these holders, if there's not enough people that want to sell, then it's definitely a darling stock right now, and it's been an amazing play.
Yeah. But I guess also, they're the only manufacturer that can really mass produce EVs. Like, there's just no one else that can do that.
Yeah,
just name like the next best is in China, right? So, if you really want competition, it seems like it is going to be coming from China, but no one else can even hold a candle to Tesla. And you see, it's just the absolute ridiculous things that are going on right now. Mary Barrow came on CNBC, and it's just absolutely crazy. She says supply chain is so complicated, but Tesla was able to navigate that much better. Barrow seems like really deluded because she doesn't even mention Tesla at all, which is just crazy. It's like GM, the UAW and Biden, like they can't even say the Tesla name. They act like it doesn't exist. And then they're saying, oh yeah, we're going to take over the lead in EVs by 2025, and like Tesla has 63% right now market share in the US, but I just think it's laughable. Now, GM had in the 1950s, they had 50% market share back then. Now they have 14%, right? And they're thinking that they're going to take over this market. But just look at their product roadmap. Does anyone really think GM is an aspirational brand?
Yeah, I'm in the space for EV, and the thing is, my top. Yeah. I have religiously watched, I think, every single EV video that's come out. That's just my whole YouTube feed. But the thing is, there's not a single GM vehicle.
Exactly.
That's on my short list. Like the
only EV that GM actually produces right now, right? No one can drive them because they're going, they've been recalled because of a fire risk, right? It's absolutely crazy. And they're saying, yeah, we're going to be the market leader in 3 years. How is that even possible? It's deluded. Like, we won't say the name of the competition, right? The main competition, right? If you look at the EV demand curve at the moment in terms of the actual sales, it's actually accelerating much quicker than I thought. And EVs are becoming closer to price parity for ICE vehicles.
The incentives are there right now. There's so many incentives that why wouldn't you get one?
Exactly.
The thing is,
they're cheaper to maintain. They have generally better performance, and they keep much more of their residual values, right? They're not they don't need these really expensive maintenance, and it seems like these vehicles can be used for a lot longer than your comparative ICE vehicles. It seems like the Titanic has struck the iceberg for a lot of these automakers, and the only thing they could do now is like jump onto some kind of lifeboats if they want to survive, or otherwise it seems like they're going to be like former shells of themselves, currently.
Well,
and the government are really trying to bail out these guys, with the whole incentive thing. They're saying, oh, you have to be union made. Like, it's just crazy, and the thing is, Rajan, it's your tax dollars that are going to bail out these companies, right? Like GM, Ford, all of these guys, when because they just don't have the right product at the right time. It's just crazy.
Yeah, I mean, what can you do?
You didn't invest in you didn't invest in EV, you didn't invest in what the future was. It's not like this is just brand new and come straight to you. They've seen it coming for so many years. They've been making press announcement after press announcement saying, I remember even watching the news like back in 2011, 2012, or even before that, and VW saying, we're going to be, we're going to come out with all these EVs by this date. And, I think it was by like 2014, 2015, and just nothing. They only just shoved some batteries into a Golf. It's like, it's like they've seen it coming for so long. GM have said it like, it's all to grab headlines. We're investing this many billion into this, but really, it's all about getting as profitable as possible, not spending as much as possible, right? Unless it's really capital that's well deployed, but it just seems like they just want to put out more adverts by saying that, more headlines, sorry, not adverts, but even though Ford has had actually really good stock price performance this year, I feel like
one of the number one performers.
Yeah, I think it's like 48% up or something like that.
I mean, but
I feel like, especially getting to GM and stocks like that, it seems like Mary Barra doesn't have a clue, and it feels like if you are going to be putting money into them, you might make a buck, but it feels like it's like you're putting money into Motorola back in like 2007, 2008 or something like that. That's just my opinion, anyway.
I mean, both of them did report this week. We had Ford and GM. We also had Volkswagen as well. With GM, they did report strong numbers, actually, $1.52, 26.8 billion in revenue. Both of them beat, and they also raised their outlook, and they raised their adjusted EBIT higher, and their free cash flow. Don't have that one. Their ROIC, GM's ROIC had a massive increase, 23.5%. But year on year, the numbers, even though they beat expectation, year on year, the number was adjusted EBIT was a big decline, almost over 50%, and their margin was around 10.3%. But initially, GM did have a good reaction on the back of that, but they're still idling plants, and then afterwards, the stock had a pretty bad day, which we'll see on the next slide. But Ford, they were the standout. They reported 51 cents. That was a strong beat. Almost $36 billion in revenue. They also raised their outlook, strong EBIT. Their margin, 8.4%, did drop from the 9.7%. So there was two of the earnings. Volkswagen also reported this week. They had decent earnings, but they cut their outlook as well, citing the chip shortage. And their CEO said that we reckon we can come closer to Tesla if it wasn't for the chip shortage. But this was GM. So GM actually was at 57.50 and had a initial strong reaction, but then the rest of the day just got sold off and pretty much ended yesterday at around $54. But Ford, on the other hand, had like a 10% move on the back of those numbers. So it's like 15.50 went to a high of 17.50 and settled at just below 17. So Ford had pretty strong numbers. Yeah, both of them had pretty decent numbers. But the thing is that I was looking a lot into these. I looked at Ford since I'm looking at getting the Mach-E. Just wanted to see what they didn't really mention much about their EV sales within those numbers, even though the numbers were impressive. They're very excited about their F-150 Lightning, the rollout of that, the Maverick. They've got obviously the Mach-E, but again, just didn't see much numbers, didn't see much of a breakdown in their third quarter. Maybe it might be in some other presentation slides, but I did not see it. So there we go.
I'm really, really excited for the F-150 Lightning, really, really excited. I really hope they can produce a decent amount, but it just seems like, they're going to blame the chip shortage, battery shortage. Yeah, but it's the best. F-150 has been the best-selling car in the US for, vehicle in the US for the last, how many years, and I think it will continue to. But I think they're just not going to be able to make it up.
That's the question. Someone said to them, it looks like the old one, and they go, but this is what the customers want. That's why they didn't change it. They go, this has been refined over so many years to give the customers what they want.
That's completely fine.
And the thing is that's the problem. The thing is, it's a great car.
It's a great car.
It's got a great range, and it's got phenomenal utility. Like the utility that they thought about across that whole truck is just phenomenal. But again, Rivian has got there. They've started delivering their first ones. You got Lucid as well, and all of them. Like Lucid's had a monster move. Deliver a car, your value goes up 20 billion. But then that's how much Tesla's
what's your cost basis? Yeah, what's your cost basis in Lucid?
11.
11, yeah. So you're up quite a lot. I think mine was just about 20. So it's good to see. I like to have a little bit into all of the pure play EV companies. Even though Tesla's my like the one that I've got the most conviction in, I feel like having a little bit in each one just stops you becoming. I guess a little bit of a toxic Tesla fanboy. You want all of them to do well, but you can just see that like delivering one vehicle is completely different to to delivering 5,000 a week or whatever it is that you need, right, to satiate demand.
I think that with Lucid, it's obviously had a monster move. I've trimmed a little bit because that's just my nature. I just think when it moves up too fast, too quickly, I'd rather just take a little bit off and then I'll put it back on if it goes below 30. Which who knows if it's going to do. But the thing is that the actual car as a whole, even though it's super expensive for the top model, just seems just phenomenally well made. And the thing about them, you got Peter Rawlinson, he's 4 miles per kilowatt. It's got the longest range out of any EV out there. If they can make, because the thing is now, these Teslas, they're getting up to 60, 70K to get Model Y, and their base model of the Lucid is like 77. So, I mean, they're sort of getting into
they haven't even started.
Yeah, that's the problem.
They're not even like you're talking about something that's like maybe 3 or 4 years away until this non-existent car is going to start. There's no point even talking about it. Let's look at the ones that actually shipping, and also I want to see the Lucid get into a real customer's hands, right, and really see it in action on the road. Like get a proper non-biased review, because right now, a lot of the the EV gen list has only been cherry picked. A few people who have gone to see it, and every single person has had amazing things to say about it. And then you don't see, like, normally it's not like that. Normally there's like, oh, well, I didn't like this so much, but like everything is just completely positive. So that it's all, we don't know yet how well, they're supposed to have LiDAR and a whole bunch of other sensors in there. How well does it work in the real world? Right now they're saying, I think, none of those features work right now, but maybe in the future there'll be software updates. But it's be really interesting to see. And make 100, make 1,000, and see how it goes. This is why I have respect for the Chinese automakers as well, NIO, XPeng. You see them; they're actually shipping loads around the world. People like their products; they're great products. That's the main thing.
But
so I want Lucid to succeed. I do want them to succeed.
As Lucid, you sell one car. I mean, you deliver one car, and you're worth more than Ford.
Yeah, exactly. It's just
36 billion revenue this quarter. I mean, they're trading at less than 2 times their revenue, and then you've got and these pure EV players are trading more than. Again, I don't know. I think out of what I have seen today, well, Ford's actually up another 1.6% today, but from what I have seen out there, I think Ford, out of the legacy automakers, do have the best chance because they've got, they're getting their hands up. My friend's got Mach-E, and a lot. They
need more models than just the Mach-E. They need the F-150.
They need to just they need to all ramp it all out.
And the thing is, they can't make enough of the one. It's like, and it's the same with the GM. I mean, same with Volkswagen. Obviously, I think they've got the best out of the legacy makers.
Volkswagen, they have sold a boatload of. I think they've sold now 70 or 80,000 ID3s and ID4s, I believe. Yeah. Which is actually a pretty significant amount. It's a year to date, 70 to 80,000. Year to date, which is pretty impressive.
Good, yeah. Worldwide, it's not bad sales. The thing is, you expect more from a massive automaker like that. But let's see. Next year will be really interesting. It'll be really interesting.
The ID5. I think who's going to. Like someone says, someone needs to forget. The hottest space right now is this compact SUV. You've got the Y, the Mach-E, and this, but we don't want the compact SUV. We just want the SUV. that someone needs to just come out with one of those, right? You obviously got the Model X, but that is just mega expensive.
Yeah,
you need an affordably priced SUV, and let's see if you can come to market with that first. Because I think that for most people, they're not technical. They just want a big car, and they just want to put 2 baby seats in there, and then they want to put their thing in. And I think that's going to be like, who's going to get that first?
Yeah, no, but the thing is that there are the SUVs like the Mercedes EQC and the Audi Q4. They're really expensive. You know, like they're way more than the Y. You know, they just don't make too many of them. That's the problem. You know, whether I'm not sure if it's actually a demand issue.
But to be honest, the problem is it's just that you want to buy a Tesla, you're looking at months. You want to buy a Ford, you're looking at months. I mean, they've got the Fords that I've been looking at. They've got tons of the. Believe it or not, everyone. So there's a Select, which is their base model, and you can get a bunch of Selects. You get a bunch of Selects, but the thing is that the other ones you can't, they're just not available right now. But before we finish, let's quickly delve into just the last stock we want to go into today, and that's AMD. Just quickly want to bring it up just because we had the bad move from Intel last week where we had like a 10% move lower and it finished below 50. Where AMD, on the other hand, it's trading at or near all-time highs and reported a beat on the top and bottom line. They're saying their third-gen EPYC processor shipments have ramped up significantly in the third quarter, and their fourth quarter looks strong as well. And they've raised their outlook again, expecting 65% growth in their revenue, which is insane. So again, it's just like AMD, Intel, different fortunes. Although Intel's still making 4 times as amount in revenue as AMD, but still. So we had that initial move up, traded almost to 128, and then we sort of settled pretty much through the rest of the week, and it pretty much consolidated. I think those earnings sort of matched the value of the share price. So here we are with AMD. So it's interesting. So what?
It is definitely.
So what have you done this week? Have you done anything? What has been your plays? Obviously, we had the Hertz deal. That's really propelled Tesla share price. That's gone bananas. We've had Lucid going bananas, and you've just seen all these dog crap stocks, all these SPAC movement, DWAC, and like just so many of them, BKKT, so many of them are just ramping up 100, 200, 300%. All these just meme stock after meme stock. You've got Shiba Inu, that is worthlessness, now worth over 42 billion. 2 of the top 10 cryptos or top 11 are now meme coins. I mean, it's just, I don't know, it seems crazy.
Yeah, it is. There's just too much money in the market, it seems, especially with crypto. People would just throw money into anything, especially if it's a new coin. I mean, if you put in 1,000,
January the 1st, it'll be worth 720 million today. And we actually saw on Twitter a wallet that apparently last August put $8,000 into Shiba, and it's worth $5.7 billion today, which would be the best trade of all time. But I mean, this is what's driving it, because everyone's just looking at what's going to be the next Shiba. Let's just find the next worthless piece of, little scam coin, and hopefully that scam coin turns into be the next meme coin. And but it's just it's insane.
The thing is that if you think about it, look into the future, right? There's going to be whole meta universes, right? If Zuckerberg gets his way. Now, what's going to be the currencies in these metaverses? It seems like people are assigning, huge amounts of value to a lot of these crypto currencies and crypto assets. And is this the way forward? Are we just too old to see what some of the younger generations see, or is it just a big pump and dump? I know there's the stat. I think it's like 68% of all crypto coins since 2014 are worth near nothing. So that could be the case. It seems like just the cream rises to the top. But I think now like the cream is made by a lot of the social crowd now. So it'll be interesting to see.
Well, it looks like the market just closed, man. It's closed. Tesla 114, 3.5% higher on the day. It's just rampant.
Wow.
Those 200 and something thousand cores, well over that got bought at the 1100, and they all just got paid. Like they all just got paid huge, you know. It's
wow,
just
that is just crazy. Yeah,
it's just.
We'll see what it's like on Monday after, you know, depending on. Yeah, like how the market makers will rebalance after this. Is it like, wow?
I think to be honest, this is just not going to stop until just expectations are tempered somewhat with just some numbers that come out and go, maybe 1.2 trillion is a bit hot for, you know, like that. That's what I feel. But
yeah, it can easily do that, because all that needs to happen is analysts just way overinflate what their expectations are, you know, and then, you know, for next quarter. That's just the main thing. Like, you know, they've been underestimating now. Now, you know, okay, well, we can't give Tesla the benefit of the doubt anymore. This type of thing is really resetting the base for Tesla, and I think it's obviously going to rise to that. You know, I had a $1,200 price target, but it seems like I had that for 6 to 9. Yeah,
that's going to hit next week, no doubt. Like, you know,
yeah.
I mean, it's going up 3% a day, so it's
yeah. But then, you know, what Tesla usually does is kind of rise like this, and then there's a long period of kind of stagnation until the next catalyst. So obviously, this is all happening due to them being a leader in EVs, and you know, being able to you know, they're the only ones that mass produce, and they have the best margins by like a factor of 3 in the industry. So like, you know, almost tech-like margins. And, you know, it doesn't seem like there's even a path for any of the other competition to catch up to them. So it'll be really interesting to see how this, you know, ends up. I mean, you know, my normal strategy at the moment is, you know, selling puts against Tesla. You know, I'm happy to be assigned Tesla stock at the right price. I'm always happy to accumulate more, but selling puts at 1,000, you know, I sold 1 or 2, you know, in the last week, but my trades haven't been as lucrative now that the price has gone up so much in selling puts. But obviously the stock I have has accumulated a lot in value. So I'm not sure what I'm going to do. I think I'm a hodler, and I think I will continue holding it at least till 2025, or there's some kind of catalyst that makes me think that Tesla's stopped executing as well. Yeah, how about you? How many Tesla shares do you own?
I got a few, not that many. I mean, what it is just naturally, with me, I've always been someone that as something goes up, just trim it. But, you know, slightly long, you know, just not my biggest position. Biggest position is AMZN, and then a bit of S&P and Upstart, which was a good stock for me. And then, you know, I've had a few dogs as well, which is way down this year. But I mean, this week, to be honest, like I was really hoping to try to get some good plays on some of these, you know, up at, like, through the roof SPAC names like DWAC and BKKT and, you know, some of these ones, but the liquidity is so bad in them, just can't get filled. And you know, it wasn't what I hoped it was going to be. I could not really execute a lot of the trades that I wanted to. Robinhood is interesting. They had earnings this week, and they were garbage. But, you know, with their crypto wallet come in, you know, it could be a bit of a catalyst. It's trading around its IPO price, you know, having been as high as 75 initially after the IPO on the meme run. But, you know, so I'm looking at Robinhood around here as well, and PayPal. That's one thing. I've just been accumulating a little bit of PayPal because that's just been killed. You know, it was trading at around 270, and then the Pinterest deal rumors came out. Then they pulled out of that deal, but it's still drifting lower, and it's like in 233. So keeping an eye on that. But to be honest, I'm just wary of the whole market. And even though it doesn't seem like there's one bit of evidence that this market's going to give away, I just feel like it's just rather stay a bit light than just be all in.
Of course.
You know, that's my sort of strategy right now. Yeah.
I've still got a bunch of cash sitting on the sidelines. I did sell some Robinhood puts. I sold some 36 puts for $4, which, so if I could get my cost basis to 32, I'd be happy with that to accumulate some shares of Robinhood. With PayPal, a few weeks back, I sold some puts on the 231. So I think it's expiring next week. So we'll see what happens with those. Well, PayPal, you know, seems like, I mean, Pinterest really messed them up, right? Is there any other? Yeah.
Pinterest is like 44, 43. They have been absolutely taken to the cleaner. So, I don't know how they're going to do with this.
Do you think that's to do with, is that to do with just this acquisition that fell through, or do you think it's actually,
terrible earnings?
Kind of,
I mean, they had, although they extracted more per user in their last quarter, their actual active users, I can't remember off the top of my head, they either went down or stagnated. So the question is, this earnings, I think a lot of emphasis is going to be in their MAUs and whether they can sort of bring that back up, because that was the thing that absolutely butchered the stock last time. So, but I think around 44, let's just see what this earnings does. But I think there's some good value there. So I'll be intrigued to see what happens around this at this price.
Any other stocks you're looking at?
Not really. Just looking at these. I mean, everything. We've just had some crazy moves this week. The ones that I'm looking at, like Snapchat, they got killed. But I'm just seeing where it bases out. That I feel like Snapchat is still ahead of a lot of the others in the social media game, and we've had a nice 25-26% pullback. I'd be much more interested in Snaps in the low 50 than it is in the 70s. Let's put it that way. So Snap, pretty much just like when stock gets killed, but they were a high flyer. You just look at them, and those are the ones that I'm sort of looking. I'm just trying to see if there's any just selling strategies around there. Bull put spreads, looking around that, Rob, and a place that I actually did one on Pinterest. I took a little flyer on a 42.40 put spread. Took about a third of the width of the strike, so we'll see what happens with that one. Again, it's going to be a bit of a gamble into earnings, which I think it's next week. I think it's next week, but I've got till December. So if it does tank, then I'll be able to have to do some evasive maneuvering to try to see what I can do to rescue it. But we'll see what happens. So.
Yeah, let's see if PayPal continues to be at this price. I think I might add a few more shares to my current ones on PayPal. But otherwise, it's hard to find deals at the moment. Apart from, like you said, Pinterest and Snap, and maybe I might add some more Facebook. Meta. I know it's up a little bit today. Meta. Let's see. But anyway, I think that about wraps it up from us. Yeah. Remember, everything that we've said here is not financial advice. It's just, two crazy guys talking on the internet. So please do your own due diligence.
Please subscribe if you can. It would help. And like the video as well. That would be very much appreciated. And we'll catch you on the next one.